Well, thank you very much. It was a great introduction. Just like the survey you saw just now, Royal Bank of Scotland had this very challenging investment challenge. This was, if you remember, during the housing crisis. They gave $1 million to all the worldwide portfolio managers. There were 360 of us, and they told us in 3 months, do whatever you want. If any of you were during the housing crisis, it was the most interesting market. So I turned that million into 89 million in 3 months and won the first prize. At the end of 3 months, only 162 managers were left worldwide. The runner-up was Fannie Mae, global portfolio manager. I think he was managing about $1 trillion. And the second runner-up was Barclays. So the only reason I'm sharing with you, because what we are going at present with the market volatility, you can imagine what kind of strategies I had done to turn million to 89 and what the Wall Street is doing at present. So just thought I'll share with you. So welcome CFA charter holders, ladies and gentlemen. First of all, congrats to level 3 CFA charter holder. CFA just released the results, 49% passed. So welcome to this elite group. We are about 200,000 worldwide, and the result kind of, the average has been 51%, so it's not bad. All right, let's get into today's presentation, and very interesting what's going through. A lot is going through. So welcome. All of us are together in this, what we call is economic roller coaster ride, which resembles more like the recession. Initially, everybody thought, since we are in the month of April, this is an April Fool prank, but no, this was not. It came very strong with a punch from Trump and tariff written all over it. A lot happening, so let's break down this into 4 elements. We are, of course, going to talk about tariffs. We are going to talk about the market outlook. Let's also talk about the elephant in the room, the fiscal deficits. And finally, we all want to know, what is Fed doing? So let's start with tariff. It's very interesting with the tariff. I took the cab from the airport, and even the driver was asking me, I'm going to have a big loss, tariffs are going up. And then I stepped out, because it's very important. I like to know what the common man is going through. Outside the hotel on the right side, there is a mom and pop store. And he gave me a very interesting perspective. He said, I'm going to order new stuff, and it's already increased by 10%. And I said, oh, really, already? He said, no, but I said, I'm not buying. So already the guys are telling me, we will negotiate at 2%. So very, very interesting perspective, what is happening. It is very psychological, and things are going around. But let's take a step a little bit. We go back a little bit, how this all started. So the year was 2001, when China finally became the member of World Trade Organization. Now, if you want to read about this, there is a very interesting book available on Amazon. And if you don't want to pay money, you can go to IMF website, China entering WTO. A very interesting reading. Now, even in 2001, it was not very easy for China to enter. It was after 14 years of negotiation, China was finally made the 143rd member of WTO, the World Trade Organization. Now, what was the objective at that time? Well, US had a very clear objective, liberalization of trade. And, well, it was done very well. Fast forward 25 years. 2025. China today has a $1 trillion global trade surplus. As far as US is concerned, why are we worried? $300 billion trade surplus with the US in 2024. Very, very next following is Mexico with $170 billion. One question I think everybody wants to know, why Trump is doing this right now? What was he doing in the first term? With due respect to Trump, I know he has not been getting that. He did impose tariffs in his first term. on China and other countries. But the scale was much lower. And yes, thanks to Biden, he kept those tariffs. But the impact which finally we all faced as consumers was not significant. So what has changed this time? And this is right, we are in April. What changed this time was really the scale. If you got a chance to look at what Trump was presenting, the scale was much higher. And also this time, the strategy which the administration is doing is a little different. Not only China, they have put each and every country there. Of course, we all know the real target is China, but why all the countries? They want to make sure that China is not using the back door. And if you have been reading the Wall Street Journal and news coming from China this week, they have been telling all countries around the world, please, please, don't negotiate with the US. Because China today is also bypassing a lot of trade through the other countries here. So this will be a very, very interesting. China and the US, they represent 43% of the global trade. So this is not going to just impact US and China, this is going to impact all the countries globally. How is this going to be turned out? We have to watch and see. But one thing is clear, China and the US, they have to sit together and talk about it. Will this happen? I think we have to wait and watch and see. So that's going to be very interesting. A lot more about tariffs, but let's move on to the financial markets. Financial markets, how did they react? And what is the outlook? Now, it's very interesting that when Trump announced the tariffs, normally what would happen? The tariffs lead to higher prices. Higher prices lead to recession. What happens in recession? Everybody wants to buy US Treasuries. Yields will go down, prices will go up. But there is something unusual happened. This time, when Trump announced the tariffs, we saw the reversal. We saw the 10-year and 30-year yields going the other way. Yields were going higher, prices were going lower. I was there sitting in the dealing room, and just for your information, in Wall Street, all the dealing rooms, everybody talks to each other. Nobody knew what was happening. Who is selling? The market was full of rumors. Who exactly is selling? The first rumor came, China is selling. That is why you were seeing the Deutsche Mark, the German yields going up. The second rumor, Japan is selling. But no, Japan came back and very clearly, Japan said, we are not selling. But Japanese companies, insurance companies, they wouldn't listen to Japan. Are they selling? Finally, the reason I talked to you about my winning that 3-month strategy, hedge funds are selling because they have the margin calls, they are highly leveraged. Now Fed, we all know Fed has a data. So why not look at the Fed data and we will know who is selling. Unfortunately, there is a lag time. The Fed releases the data with 2 months lag. That means now we have numbers of Feb. And as per the Feb numbers, who's holding US Treasury? Japan is number 1 with the $1 trillion. China is the number 2, $784 billion. So we don't know exactly at present, and this will remain a mystery. A lot of rebalancing going on with central banks around the world, but the clear numbers have still not come in. Now, a lot in the markets, everybody we have seen around are comparing the crisis that is happening now to COVID crisis. If you have read the articles coming in, they said, oh, they did this in COVID, they'll do now. But there is a big difference here. In COVID, we had 2 clear goals. First was shut down, let's get the vaccine. Second goal, ease the monetary and fiscal policy. Now, if you go back to the COVID, inflation was 0. The Fed has a different objective that time. They wanted to pump in the inflation. A $6 trillion was pumped into US economy. Everybody and nobody got money for doing nothing. That's exactly what happened. And I'm a board member of a couple of other non-profit organizations. We got checks. We got a check, and next month a letter stating your amount has been written off very clearly. So money was pumped in left, right, and center. What is the big difference this time? This time, it really, really resonates more like the global financial crisis. If you recall, when Lehman Brothers went bankrupt, that was a global financial crisis. And this time, this represents the same thing. Why? Simply because what we are going through now is a policy decision. But exactly what is a policy? That is a question being asked. The market is saying, the policy is the US wants to stop fentanyl coming into the US, all the drugs. Really, that's a policy? No. Second is, oh, US wants jobs coming in. We want to develop the industrial sector. That cannot be. We are already full employment. The third is, no, this has got to do with national security. So what exactly is the policy? Nobody knows. And I was at a conference in DC last week. It seems like even the administration doesn't know what is their policy. So what is this? No policy, uncertainty. Uncertainty, volatility. Volatility is what you're seeing in the market, and what you are exactly seeing is the market is moving on the rumors. The big rumor that came yesterday, he's going to sack Powell. And the market started moving. So that's how the market is moving right now without a very, very clear policy. Until the time they don't have a policy which is announced, because one thing based on, if you go back even last 50 years, one thing this market doesn't like is when you don't have a policy. That's something the market doesn't like. So given the circumstances, the question is, what should we do? What's the outlook? If you look at the current market, this is a trader's market. A great market if you can buy and sell 10-year on a daily basis. In and out, and in and out. Close your position at the end of the day. There are financial institutions, very conservative institutions doing that strategy right now. And what about the buy and hold investor? That's a real dilemma, buy and hold investors, because if you step out of the treasury, spreads are widening. With the daily news coming from Washington, D.C., it becomes very challenging. Important thing there is really, really to do your research and pick up a good names. And when you pick up those names, you will see volatility happening, but you have to stick to the names. So if you look really, treasuries, if you ask me personally, 10-year and 30 years are really cheap. If you looked at your survey also, where everybody is expecting a lot going on, US economy is going to come down. Outside that sphere, if you go, what are we looking at? We are looking at, and now I'm talking about nice investment grade names, we are talking about agencies, Supra, sovereign. They are again a good sector. Headline news, Thailand, sovereign bonds were going up. I was laughing myself. If you all remember, Asian crisis started from Thailand. Really, people are buying Thai sovereign bonds? But that's happening. Now here, really on the agencies, Supra, sovereign, you have to really look at the credit and again buy and hold strategy. Outside the agencies, which is the next sector we are looking at, which is again really very tempting at present, is the corporate world. Corporates in US are in a very strong position, but here again, a lot of research and strategy has to be done where you can pick up good names because spreads are widening. And we are in the, what we call as the ETF world. You know, ETF world is very interesting. 10 people, they want to sell. There is a clerk sitting there. He's just putting orders to sell. He doesn't care because he's to provide liquidity. So that the whole ETF world has been kind of advantageous to the market, especially for the buyers who are really looking for the value. If you move out of the corporate world, we are looking at mortgage-backed securities. Mortgage-backed securities are really a flavor. There are Ginnie Mae government-guaranteed mortgage-backed securities. Again, spreads have widened there. Fannie and Freddie. Now, one thing which Chairman Powell did, he did a great job, is keeping rates low for a long time. Each and every household in the US has refinanced. I mean, I did refinance at 2.25% 30 years. So if you ask me, somebody comes to buy my house, I have to really get a good premium before I'll say, okay, let me get rid because of that mortgage, because the bank is paying me 4.5% on my deposit. So why I'm doing that? Same thing happening with the US housing market. Everybody is loaded. Housing prices have gone up a minimum of 50%. Nobody is selling, and that's what is happening. So mortgage-backed securities are really there to be seen. Look at the Ginnie Mae government guaranteed. Only thing, those who don't have experience in mortgage-backed securities, there is always a question. I attend board of directors meetings, and it's a question about, but the maturity. Now there we have a concept of maturity and average life, because we all pay the principal and coupon, what we call interest every month. So your 10-year bond is really 3.5 years, and your 30-year is really 6 to 7 years. That's something to look at. Another market which is really kind of has all the signs coming up, it's a municipal market. In the US, we have the 50 states, we have communities. Everybody, all the municipalities issue bonds, and there again, very interesting thing is going on. You all must have been reading about Trump fighting with Howard. Howard has $52 billion. It's a nonprofit, and still they want grants from US government. That's going on. How far this is going to impact a lot of nonprofit status. We have tax-free taxable bond, how that is going to be impacted. Again, there are good name, good state, good community names that has to be looked. Another market which has been growing is your small business. If you've looked at the small business, these are all mom and pop stores. If you've been to New York, if you've been to the US, you see all mom and pop stores. That market has been growing also because that's government guaranteed. And they are prime floaters. There you get prime, and prime is 300 basis points over the Fed fund rates. So a lot happening, but one thing which has grown really after COVID is the alternative investments. Since COVID, all the conferences for alternative investments are going super duper full. A lot of private equity capital entering the private markets. Your world of CLO, structure notes. And finally, if you're a bank, look at SRT. I don't know how many of you are familiar with that term. No? So SRT is a significant risk transfer where the banks can sell their loan portfolio to the trust. They can decide if they want to hold a percentage of that trust or not, or get rid of entirely, keep the servicing or not, and that market is booming at present. Why? Because the private wealth fund, private equity fund, all the funding is coming. The Fed is wait and watch there, because at the end of the day, if you look at the Fed, they only get involved if money is coming from the banks or day-to-day person is getting involved. This is a private equity, private wealth funds are coming in, so it's a wait and watch situation. So a lot of opportunities. There is, as we say, when the markets are down, a lot going on and a lot to be kind of picked up. But then again, it's very clear you have to have your research strategy and you have to deal with the volatility. All right, we have looked at the tariffs, we have looked at the markets, the outlook. Let's now move on to the elephant in the room. The elephant in the room is the fiscal deficit. This is something which is not talked about. US last year, 2024, had a $1.83 billion deficit. The US deficit, total debt at present is $37 trillion. Our debt to GDP is 123%, which simply means 123% means we are borrowing more than our output. Now there's a lot of debate among economists on the deficit, because everybody thinks deficit is good for us. You know, US traditionally has always grown through deficit. Deficit financing has been the part. But has US reached the tipping point? There was a study done where they looked at the deficit, they looked at every dollar, In 2024, when the US borrowed $1 of deficit funding, 80 cents only contributed to GDP. The study compared to 1981. In 1981, every dollar contributed $3.15. So really, as happens, personally also, if we see, or if you see among your friends, this is very common in the US. When you borrow money, we reach a tipping point. So the thing is, has US reached that tipping point? We have a big debate on that going on. And of course, the positive side on that debate are those who point out, guys, it's a US dollar. We have our own printing press. We are going to print them. Why are we worried? But that is not a solution to the problem. Unfortunately, the Fed cannot play any role in the deficit. This is something which the administration has to really deal with, and so far they have not dealt with. Tariff, you think tariff is going to help this? Definitely no. Tariff is not going to help. So US has a big deficit problem, and that elephant remains in the room. Okay, tariffs, market outlook, deficit. Finally, I think one thing which we all want to know, what is Fed doing? That is something very important. What is Chairman Powell doing? Well, if you read all the headline news and tweets coming in, looks like he's going to lose his job. Trump is going to fire him. That was a big news yesterday, and if yesterday you played the 10-year part, that was a big volatility happening there. Now, really speaking, if you look at today the US economy, we are doing excellent. We are doing very well. Where is the economy at present? Full employment, 2.4% growth, 2.5% inflation. We are in a great position. So I know Trump is tweeting, but given this scenario, just because Trump has put tariffs, it's not like Chairman Powell or these guys are going to come and reduce rates. We need some evidence. We need some strong evidence, and that's still not there. Let's go back to the COVID. Chairman Powell also, I think he's a 50-50. We cannot give him all the marks, because if we go back to COVID, he invented a new phrase, transitory. If you remember, he was asked about COVID and inflation. He said, it's a transitory. Well, he kept the rates really low. And one fine day, the rates went up, and they went up to such an extent. You all have read about Silicon Valley Bank that went bankrupt. There was another couple of other banks went bankrupt. What were they doing? Well, strategy for the banks were very simple. They were taking short-term deposit, investing in a 30-year part of the curve. Yes, US Treasury, risk-free, but then duration risk. Friday morning, that news came that Fed is going to increase the rates. 30-year went up. Monday morning, these banks filed for bankruptcy because all the deposits in the banks were from hedge funds. And nowadays, we all have our phones. One swipe and your money is out. What's the solution to that bankruptcy? It's very interesting. One economist said they should have shut down their computers. So nobody could have withdrawn money. But long story short, Chairman Powell, by calling that transitory and just waiting for a longer term, was not good for the US economy. Finally, end of the day, yes, COVID turned out better. We came out of it. But then Chairman Powell did again use the term transitory for the tariffs. He said tariffs are transitory, but I don't think they are. He has come back and he has kind of tried to play that statement, but tariffs are going to play down. But if you look at the US economy, even before the tariffs came in, the $6 trillion that was pumped in is showing the sign of coming down. So we are seeing from this year, even before tariffs, we are seeing sign of economy slowing down. So what's the Fed going to do? I think we are going to see more signs coming in, and you are going to see 2 rate cuts coming in the second half of the year. So Fed is going to cut rates. Okay, so we have seen the tariff, we saw the market outlook, deficit happening, and the Fed. Few other headlines, a lot happening in the market. The first is Trump loves crypto. What's going to happen with cryptocurrency? Well, I know Trump loves crypto. It's a parallel economy. Till we have clear-cut legislation, Trump can talk about it, but crypto is not coming mainstream. No way it is coming. Crypto will stay where it is. The second news, of course, which is impacting, we are in full employment, but artificial intelligence is going to replace some of us. It's a very interesting field. It's no more a version of Google. If you really have attended any of the ITs and artificial intelligence, that is coming up with a lot of good answers. So that's something for us is to wait and watch and see. So a lot happening in the market, and we have to wait and watch and see. One thing which is very interesting, in the survey I saw that most of your members are worried about geopolitical risk. I know I talked about all financial risk here, but what about the geopolitical risk? That is one risk which mainstream media is not talking about, no one is talking about. We all are listening and hearing only about tariffs. And what is that risk? Well, if you have been reading, China, the Trump administration has come and put tariffs on China. They have kept them busy there. As far as Russia is concerned, you all saw the Ukraine president coming in, and they have told them, thank you very much, we are not going to support you anymore, and very keen the US is to shake hands with Russia. There is one country left here. And as we are sitting here, we have the US delegation talking to them. That's Iran. The US delegation is in Oman. The second round of talks have already happened. And the Europe is represented by Italy. Guys, Iran has nuclear bombs, and they are ready. So there is a high probability. Remember, this is Trump's second term, and he wants a name for himself. There is a high probability Iran is not going to agree on any terms which is presented. So what are they going to do? They are not going to do anything. And there is a high probability that US is going to bomb those facilities. So that's a big geopolitical risk. Forget the tariffs, forget everything. That is one big risk which we all have. One message out of today's presentation, we all have to keep in mind. And already 2 rounds have been completed in Oman. Nothing has happened. Let's see how that progresses. And as I said, this is one of the very stormy economic roller coaster rides. So ladies and gentlemen, buckle your seat belts. We are all in together for it, and we have to face it. Thank you.